Hey guys, welcome to First Principles Finance, where we really try to look at the fundamentals of the economy and of individual companies. So I finished digging through Tesla's Q3 earnings and listening in on their conference call, and it is insane. They are crushing it. I know there's a ton of other Tesla bulls out there, but I have to say that this is probably one of the most impressive quarters yet. It's actually only fitting that the first video on this channel is covering Tesla, since the inspiration even behind the name First Principles Finance is from the man himself, from Elon. So first off, let's take a look at the investor deck that they've shared, the shareholder letter, and really dig into what these results are and what they mean for Tesla's price and their earnings in the future. So looking here at the highlights, we see that they had 5.9 billion increase in cash and cash equivalents, and that their operating cash flow less capex, so their free cash flow was 1.4 billion in Q3. So this is actually incredibly important. So you have to understand that in most cases, huge growth companies do not post insane amounts of free cash flow. In fact, in most cases, for example, if you look at Snowflake among many other companies, these companies are actually burning cash. They are trying to grow as quickly as possible, but oftentimes that's at the expense of having GAAP earnings or a free cash flow that's positive because they're spending so much cash on marketing and other items. So for Tesla, which has been able to grow at an incredible pace even this quarter, especially in light of the pandemic, to still be posting such insane positive free cash flow is definitely a feat. So now let's look at profitability. They had 809 million in GAAP operating income and 9.2% operating margin. I just want to say that even that is super impressive. The fact that they're able to achieve that kind of operating income is actually a bit more indicative, in my opinion, than trying to look at the GAAP net income on its own. And again, that's actually highlighted right here. You see that there was a 543 million increase in SBC, which is stock-based compensation. So you know that Elon actually has his own stock compensation package, and obviously this is absolutely worth the cost of it because this company simply could not be where it is today without his influence, without his impact, without his leadership and his vision. So I would say that is absolutely worth it. And this is not something that you'd expect every quarter. These are tied to his compensation package, and there are certain thresholds and tranches that need to be met. So you can think of this as a sort of one-time expense, and it certainly won't be something that impacts Tesla's earnings every quarter. Next, we look at operations. Obviously, we had record vehicle deliveries and profitability and free cash flow, as previously mentioned. So again, all of these are typical metrics that Wall Street will care about, though it is really amazing that they're able to achieve these results while still growing at such a rapid clip. So in my opinion, a lot of these issues that Wall Street will highlight regarding their lack of profitability or the idea that much of their profitability is driven by regulatory credits, I think is simply not correct. Tesla should easily have the ability to reach profitability even without these regulatory credits, and we'll jump more into those details as we look at the following slides. And lastly on this slide, it goes without saying, is a huge win for Tesla. The first step to having this full self-driving rollout has already started. There's actually even some YouTube videos or Twitter videos that are available now that show people utilizing this update. And it's insane. It's actually going to fundamentally change how people commute, how people interact with their cars. And now the idea of being able to have a robotaxi fleet is honestly that much closer. While it's clear that they do have competitors, such as Waymo, I would say that Tesla is so much further along in terms of the amount of data needed and in terms of being able to scale their business, given that all these Teslas on the road, they're not just cars, they're also vehicles that have state-of-the-art software. And that software can be updated and make your car feel almost like new in some certain ways. Because obviously, if you're able to just jump in your car and tell it where to go without ever having to touch anything, and that's all possible with even an older Tesla model that simply has a software update, that is absolutely a game changer and will have huge impacts on their margin moving forward. But before I get too far into it, let's just continue on with this deck. Auto revenues have continued to break records. We see that Q3 has absolutely smashed Q2 in terms of earnings, and year over year, it's also extremely impressive. But we look at this automotive gross margin, and this is something that a lot of analysts actually didn't believe that Tesla could get to. They doubted Tesla's ability to make a profitable vehicle. And yes, they are still earning some of these regulatory credits. But if you really look at this and you consider the fact that now Elon just tweeted that he'd be increasing the cost of FSD to $10,000, you can easily see how we might get to a point where these margins are even more insane. People will want to buy Tesla simply for the fact that it provides the opportunity for completely autonomous driving. It won't just be about the great feel of Tesla or the insane acceleration or any of these other features that people have already grown to love, but I could easily see FSD being the primary driver of both sales in the vehicle as well as adoption in some of these premium features. Next, if you look at the operating margin, again, it is insane, 9.2%. This is such a huge increase, and we can expect that to continue in the future. We know that Tesla is still ramping up production in some of their new factories, and we know from Battery Day that there will be so many different cost decreases in terms of their manufacturing, especially in their battery cells. And so we can expect this operating margin to only increase from here, which again points to such an amazing future for Tesla as a company. The last number I want to highlight on this page is actually Capex. So we can see that they spent a huge amount on Capex, and that's actually something I love to see from a growing company. I mean, Tesla is still in this exponential growth phase. You can think about their expenditures in Berlin and in Shanghai and even in Fremont. These are all things that will enable Tesla to really deliver at scale and meet the demand that they have worldwide. And you can only imagine that with an upcoming vehicle that will be under $25,000. So it's crucial that Tesla continues to expend on CapEx in order to meet that kind of demand. And lastly, I did want to point out that much of the concern surrounding their balance sheet is honestly bogus. I mean, you look at this cash and cash equivalents, it was a genius move to have raised more capital when Tesla had hit that record price. And honestly, it's funding a lot of their ability to be able to expand and to pour more into this CapEx amount. So from a cash standpoint, they're generating cash flow, they have a solid balance sheet, and there's honestly nothing that I can see that can really stop Tesla at this point. So again, here's another recap of their financials. We know that they significantly outperformed on every metric. So on revenue, they beat with an estimate of around 8.28 billion per FactSet, but they came in at 8.7 billion for the quarter, and even earnings per share was stronger than expected at 76 cents versus Wall Street's expected 57 cents per share. I know we've already driven this point home, but their cash position is absolutely strong enough for them to handle all of these continued growth opportunities. So let's take a quick look at their operational summary. You can see that obviously production has been strong. We've continued to see great growth in production of all of their vehicles. So something I did want to point out is that Model S and X deliveries are actually stronger for the quarter. It is a decline year over year, but you can imagine that that's expected given that many of the new vehicles that they're selling are catering to a slightly lower price point, which is actually much better for the average consumer since most people are not going to be able to afford those luxury cars. We can see a shift towards more 3 and Y deliveries, but it was a pleasant surprise to see that Model S and X have actually seen an uptick. And maybe even more importantly here, we can see that the solar and storage deployed are significantly higher this quarter. It actually reflects a lot of the statements that Elon has made surrounding the energy business in saying that there's a very real chance that the energy could match or even surpass the vehicle business. And we know that Tesla is certainly not just a car manufacturer like many bearish analysts will try to say, but it is in fact a chain of different startups. And I'll get to that more as we look at the comments from the conference call. So moving on, we do see that vehicle capacity will continue to grow through 2021. And it's incredible the kind of output that these factories can achieve. And to me, it actually points to the fact that even though Elon and the Tesla team have continued to be conservative in their estimates for how much they may be able to deliver in 2021. I actually anticipate that they will blow through 1 million deliveries. And I know that might seem like a bold statement, but given the fact that they are in this S-curve for so many aspects of the production, and given that these factories have been built out at a record pace and should be on track to provide incredible amounts of production, I really do believe that Tesla will achieve that goal and then some. So again, it can't be emphasized enough that Tesla has such a technological advantage over so many of its competitors. If we look at full self-driving, this is actually a key to Tesla's future. You can imagine that once a robotaxi fleet is fully equipped and it's passed every regulation needed, there will be very little reason to own a car for many people, especially those in the city. It becomes so much more efficient, not only in terms of getting around and not having to find a parking space for your car and paying several $100s a month for that, but it also contributes to Elon's vision of being able to reduce carbon emissions globally. And he has done so in a way that makes sense from a capitalist perspective. And we look at this vehicle software again as being such a great asset for the car. To be able to update software and improve the car that way versus having to trade it in or replace it with the latest and greatest model, the fact that so much of it can be done simply from updating software is incredible. And lastly, this point on battery and powertrain is so key because it just points to Tesla's innovation in being able to dramatically reduce costs so far below what people originally imagined. And again, this points to this idea of first principles. Elon has constantly been thinking outside of the box. He's been breaking through constraints that others thought were impossible to break through. And now we have the possibility to have a car that's priced in that $25,000 range. So again, all this points to why I think Tesla can easily win the EV market for so many years to come. Tesla has the ability to win over all of the average consumers. So again, this is why I think Tesla will dominate the EV market and cannot be dethroned. Next up, and we'll move quickly here, we see that Tesla's energy business is continuing to scale. For example, they're able to install a solar roof in just a day and a half. And so you can imagine that as more and more people experience the benefits of having a solar roof, as more and more people adopt electric vehicles, there is absolutely an ecosystem that Tesla is starting to build, similar to what Apple has done with electronics. So I'm so excited for what the future ecosystem of Tesla could look like, where a homeowner has Tesla solar roof, is able to charge their Tesla in the garage, and whenever they want to go somewhere, they can just utilize full self-driving. And finally, they can potentially even go to Mars. Who knows? And so I remain extremely excited for what Tesla can accomplish over the next decade. So finally, we look at Tesla's outlook. We see that they are still on track to produce and deliver 500,000 vehicles this year. I will say Elon is getting better at communicating with the street. We no longer see this kind of overpromising or tweeting that he's going to take Tesla private at 420. And so in general, I think Elon knows how to play the game now, so to speak. Wall Street knows that he wants him to keep sandbagging these production and delivery numbers, but obviously not to be so off track as to deliver a huge surprise every time, otherwise they'll be onto him. So he'll continue to sandbag just a bit, but continue to over-deliver. And of course, once we see these factories completely up and running and we see these new Cybertrucks being built and even Tesla Semi, I think we're going to see, again, quarter after quarter after quarter of new records on every level. So moving on, we do see these battery day highlights. And again, I would just highlight There's so much going on in terms of Tesla's ability to manufacture and produce vehicles in a way that is completely vertically integrated. The fact that they're able to realize so much Capex reduction and cost reduction over the next year, 2 years, it will be by far the highest margin vehicle available to the average consumer. So we have some nice, pretty pictures of the different factories that are being built. So we have Shanghai, Berlin, Texas, and this Megapack project at Moss Landing. So this is again their entrance into the energy business, and I expect this to really continue growing as more and more cities adopt AutoBidder and some of this other technology that they have. So these charts do highlight clearly how much Tesla is able to deliver on these promises and how they have, in fact, grown from this company that people were legitimately worried would run out of cash and could go bankrupt to now being this dominant player that is only strengthening its chokehold on the EV market. Now, of course, there are going to be entrants like Lucid and others who can compete in the luxury space, but no other vehicle manufacturer is so vertically integrated like Tesla. No one has the amount of software and AI edge that Tesla has. So it is impossible for me to see someone else really being able to break Tesla's grip on any of the sub-companies of Tesla, whether it be manufacturing, AI. As long as Tesla continues on this trajectory, I can see them absolutely being one of the greatest winners of the next decade. And here's a trailing 12-month view that further shows their dominance. The rest of these slides are their financial statements, so I do encourage you guys to take a deeper look at this, but holistically speaking, they are doing incredibly well. Their balance sheet is extremely strong, and their cash flow, again, is through the roof. So I just can't imagine, again, anything disrupting their business moving forward now that they've exited that stage in 2018 where people were legitimately worried about their bankruptcy to being in such a position of financial strength now. And so moving on, let's look at how the stock has performed following these announcements. We see that Tesla has been trading in this massive wedge following the stock split. And so it had a high of $502 and change to now trading at around $427 after hours today, the first day after the earnings announcement. And what I would say is that it's a bit atypical for Tesla to be so flat following an earnings announcement. But to me, that actually, again, speaks to the maturity of the company. Elon and his team have been a little bit better about delivering estimates that I think are in line with what reality is. They continue to sandbag it a little bit just to make sure that they're able to outperform. But these expectations, I think, are now growing closer and closer to the truth. As analysts continue to evaluate the company, I do expect actually volatility to come down a bit as we look into future quarters. However, a big wild card will continue to be whether analysts are properly accounting for these various business segments that Tesla is getting into. Elon actually said some really interesting things on the conference call. So he made one point that not a lot of people picked up, and it's that insurance could account for even 30 to 40% of the value of the car business. And you might be thinking that that's actually pretty insane. You think about Tesla being this $400 billion company currently, and if we think about having an insurance company spun off that has 30 to 40% of the value of that business, I mean, we are talking about an absolutely incredible amount of value being driven by insurance. The way that I think about coming to such a valuation is really an absolute confidence in full self-driving. To me, Tesla will be able to offer insurance at a below market rate because they're just going to be more efficient and more intelligent about how they're able to evaluate risk on this insurance. And that'll be made possible potentially by their internal camera on their car. It will also be made possible by the fact that with so many miles logged on full self-driving, Elon thinks that this software could outperform human drivers. So with so many people using full self-driving, it could drastically actually reduce the number of accidents and hence the number of claims. So if Elon's able to push this insurance to a vast majority of Tesla owners and they're able to minimize the number of accidents and claims that they have to pay out, it actually could feasibly become a huge portion of their business. Couple that with the fact that the more Teslas there are on the road, the more efficiently they'll be able to communicate with each other, the lower the likelihood that you would have human errors in terms of driving. And so there is an absolutely strong network effect at play here. So evaluating Tesla's insurance business is definitely something that I think Wall Street analysts have not yet priced into the stock. Overall, I could not be more bullish on Tesla right now. I really believe that they're going to crush it in Q4. I think that the hype for full self-driving hasn't been fully realized yet in the stock price, and people are still underpricing the solar and energy business as well as this potential insurance business that at scale could be huge. So I am personally going to be happy to buy more Tesla shares, especially before the street realizes that the stock is still so undervalued. And my new price target for the end of this year is going to be $550. And even that I think is conservative relative to Tesla's current value, there is some discount factor that needs to be taken into account for these new businesses that have yet to fully scale. But as Kathy Wood, Tasha Keeney, and others from ARK Invest, as well as other YouTubers have said, many of these sub-businesses of Tesla have not even reached scale yet. And so these businesses alone could be worth several hundred billion, if not even trillions of dollars. So I am absolutely going to be continuing to invest in Tesla in the future. And let's see. Let's see how the street ultimately prices Tesla shares as we head into the end of the year. So thank you guys again for joining me today. It has been a huge quarter, and I am so excited for what we're going to see in Q4, and I can't wait to connect again on the latest Tesla news. Thanks, guys.